I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. I'm very excited for this episode. We love speaking to CEOs of listed companies, and we've got a massive CEO here over in the US, but exciting news that they're coming to Australia.
That's it. Really pumped. And it is our absolute pleasure to welcome Brian Armstrong to the studio. Brian, welcome.
Thanks, guys, for having me. I appreciate it. I'm excited to be here.
So Brian is the co-founder and CEO of Coinbase. Brian and his co-founder, Fred Ursum, founded Coinbase in 2012 as a way for investors to trade Bitcoin and other digital currencies. 10 years later, Coinbase is a $20 billion company listed on the NASDAQ with more than 43 million users worldwide. So we are very fortunate to have Brian with us today, and we're going to unpack the story of Coinbase, its expansion, and the future of crypto. So let's get stuck in, Ren.
Let's do it. Now, Brian, we love to start these interviews by having the CEO describe their company in their own words. So to kick us off today, what is Coinbase?
Yeah, sure. So Coinbase is the primary financial account for people accessing the crypto economy. So that basically means we help them buy and sell crypto, we help them store it, and then we actually help them use it in a variety of ways, whether that's paying for things online, whether that's using dApps and Web3, which a lot of people are interested in, whether it could be using DeFi, and of course trading too. Trading is kind of the early use case for crypto that kind of kicked this whole thing off. So yeah, we've grown a lot since then, and actually in the intro, I think you said 43 million. We're up to 103 million verified users now.
Oh, so sorry.
Growing a lot in the last 10 years, and no, I had to get in that little correction. But no, it all started with just me on a laptop, hacking on a prototype, and now we're a public company and almost 5,000 people. So it's a pretty crazy journey over the last 10 years.
Yeah, huge growth story. And apologies, 103 v 43. I would be correcting that as well. So fair play. So Brian, when you started Coinbase, as you said, back in 2012, Bitcoin was only a couple of years old. Ethereum hadn't even been conceived yet. What did you see in 2012, and how has the journey been watching the development of the crypto ecosystem?
Yeah, so actually the first thing that I saw was in 2010. It was probably around December, the holiday season in 2010. And at that time I was working at Airbnb as a software engineer, product manager type role. And I was really just home for the holidays visiting my family. And sometimes it gets overwhelming. You have too many family in the house. And I was kind of upstairs in my room just reading things on the internet. And I happened to be on this website, Hacker News, which many of your listeners may have heard of. But I happened to see the Bitcoin white paper in 2010 at that time. And I remember reading it, and it kind of struck me. I was like, wow, this is a really powerful idea. It's kind of talking about how instead of having an internet that's global and decentralized where we can move information around, what if we had something kind of like that, but it was for moving value around and money and all types of value. And I remember reading it and thinking like, that's a really powerful idea, because it always seems so broken to me how money moves around the world. Like every country has its own little proprietary, system and product. And there's usually a local oligopoly of players. And if you want to move money across border or pay out people in various places around the world, which I had seen, as an employee at Airbnb, I had tried creating a company previously that had trouble doing this. And it always seemed like there just wasn't very much innovation happening in this space. Like WhatsApp, for instance, allows you to send a message anywhere in the world instantly for free, right? And it's just sending some bits of data. Well, payments are just sending bits of data every time you swipe your credit card or you move a wire transfer. But why isn't it free and instant and global in payments too? And there's so much legacy baggage and tied up in all of this, and every country sort of pushing their own system, that there's no global open standard for money and value. So I got really excited about that idea over the coming 6 months and 12 months. I couldn't stop thinking about it. And I went to a couple Bitcoin meetups around the San Francisco Bay Area at that time where I was living. And there was a lot of early people there. They were like kind of half crazy people and half like anarchists and stuff. And then the other half were like these computer science PhD type people, like working on various crypto algorithms, cryptography. So it was a really weird environment at that time. And there was already a couple of crypto companies that were out there, like Mt. Gox, and there was one in the Bay Area called TradeHill. So you might laugh at this, but I thought I was actually like I was too late. I remember in 2010, 11, I was like going out there. I was like, maybe I'm too late to start this company because like the early people are already making these things. Such a silly idea in hindsight. But I basically just couldn't stop thinking about it for like 6 months. Told all my friends about it. They thought it was crazy. That they thought it sounded stupid. But I couldn't help myself. I started working on a prototype nights and weekends, and that's kind of what eventually led to Coinbase.
Wow.
Yeah, wow. It's an amazing story. And I think the Coinbase story, you've scaled with the crypto ecosystem and you've really built a reputation for working with regulators and trying to, I guess, take some of the legacy financial players and regulators on the journey with crypto. And it's led you to be one of the first listed cryptocurrency exchanges. I'm interested to know how the conversation has changed from when you were first having it in 2012, 2013, 2014 to now when you're having it in 2022. How have the legacy players sort of responded to crypto and how's that changed over the journey?
Yeah, so early on, I got a lot of blank looks when I told, nobody had really heard of Bitcoin or anything at that time. And I remember, we were reaching out to like local banks and things like that. Like, hey, can we get an account set up for this thing? And we have an exchange for this digital currency platform. And we want to be able to process payments. And at first, people just didn't even know what it was. Later, they were like pretty anti this. There was so many stories that came out early on about like Silk Road and like illicit activity. And you still see some of that now, but it was like 10x the amount of, it was like 90%, scary stuff back then, and now it's like 10% scary stuff, like probably even less, right? So back then, I remember actually one bank that I called. I was like I was trying to find a bank to work with us, and they were like, "We do not work with Bitcoin companies." Click, and they hung up on me. So I definitely got a little bit of that kind of stuff happening, but basically through our contacts with early investors, we managed to get an early bank partner to work with us. We started investing early on in compliance and having like a really strong kind of know your customer program. I basically, the thesis I had early on was that this industry is eventually going to become regulated and treated like any other kind of financial services. So the regulatory environment takes a while to evolve, but let's just do something reasonable in the meantime and kind of show good faith effort to build the kinds of systems that we think will eventually be required. And then that'll help us get off the ground. We also went and, I was a software engineer, normally would just kind of wear the t-shirt or whatever, like I'm wearing now, and hoodie or whatever. But, when I'd go meet with regulators, Fred and I would put on the suit and, we went to talk with folks who were kind of doing these money transmitter regulatory regimes in the United States, where it's state by state. And then we eventually started doing it internationally as well. And basically trying to be an educational resource, trying to just show up and be reasonable people. It's one of these things I've noticed about human nature is, oftentimes, if people hear about something in the abstract, they're skeptical, right? They're like, oh, this is just some crazy person on the internet saying these things. But when they actually meet you in person, it's a lot harder to like be, upset or like, not trust somebody. Like if you just show up and you're reasonable and you can communicate some stuff and they're like, okay, this person is not a bad person. They're trying to do something good in the world. Like maybe there's some iteration they need to do, but anyway, that kind of stuff goes a long ways. Like these personal relationships matter. And so, yeah, I think Coinbase has built that's kind of what we're known for, is building the most trusted brand in crypto that's compliant, it's regulated. We have great cybersecurity. A lot of people trust us to store their crypto. We've kind of landed deals with like the biggest financial firms out there in the world, like BlackRock. And then they also trust us for ease of use. Like our products are intended to make crypto easy and understandable to everybody. You don't have to have like a computer science PhD or be some kind of like, quant trader or whatever. We want to make crypto accessible, although we have people, by the way, who are both of those things who also use Coinbase, but most people in the world are not. And so we want it to be accessible, most trusted, easiest to use. That's kind of how I always think about our product offering.
Yeah, love that. Well, you're now entering into Australia, and we're really excited about that. I guess the question is why Australia, and how do you plan to take market share? Because with it, what feels like more and more cryptocurrencies coming into the ecosystem every day, there's more and more exchanges now available. So yeah, how do you plan to sort of take market share from some of the main players here in Australia?
Yeah, so we're really excited to launch in Australia, and I think one of the reasons is that Aussies have this history of kind of really embracing innovation, and they've been on the forefront of a lot of that. Kind of to your prior question about the regulatory side, I mean, we went in and decided to kind of register with AUSTRAC and really do this officially, and we created a local entity in Australia. We hired an amazing team locally on the ground. We went and did integrations with PayID to make it really easy to get Australian dollars into and out of people's accounts. We're even kind of enabling some of the more advanced trading functionality for our users that want to do that right in the app. And so, look, you're absolutely correct. There's actually lots of crypto companies now, and I consider this to be a good thing. It's kind of like, again, going back to my early example of the internet. When the internet first came out, it's not like one company is going to win the internet, right? The internet is sort of a tool that's going to be embedded into all kinds of different things in the economy. And that's how I feel about crypto too. So yeah, there's going to be some exchanges and trading that goes on. There's going to be people building crypto games. There's going to be decentralized social networks. There's going to be people creating new kinds of like organizations around DAOs. There's like creative stuff around NFTs. So, the way I think of Coinbase is the way we differentiate it. We're not trying to be everything to everyone in crypto. But what I do think we've been able to do is basically, again, build the products that are the most trusted and the easiest to use. So if retail customers want to come in and just they're still understanding crypto. They want to buy a little bit of it, get some exposure to it as an asset class, and then actually start to use it. Coinbase is a place where you can do all of those things in one app. We're not trying to be just a trading platform for professional traders. We're trying to also allow people to go use their crypto in a very seamless and easy and trusted way. We're doing that for retail. We're also doing it for institutions, by the way. Some big investment funds and hedge funds, pension funds. They're also we run the largest kind of institutional platform for crypto as well, called Coinbase Prime. So these are all good things that we can do any market that we go into, and hopefully we want to like help the whole crypto industry grow. It's not really about anything about. I'm much less focused on competition with any other particular crypto company, and much more focused on like how do we grow the size of the pie 100x.
Yeah. Yeah.
Now, Brian, speaking of growing the pie 100x in the crypto world, there's so much happening, and we want to, I guess, get your thoughts on some of the big things that are happening, but we want to make it a bit of a game. So we're calling it Hot or Not, but we want to throw out some of these, I guess, big moments in crypto or these big concepts and get your thoughts on them, whether you think they're hot or not, but also, I guess, a quick why. And we've got to start, we're recording this here in Australia on the 16th of September. The Ethereum merge happened yesterday. So hot or not, the Ethereum merge.
Oh, very hot. I'm super proud and just admire the team that had that launch finally come together. And I think it's great for the merge is great for Ethereum, not only in terms of like scalability and the roadmap they have there, but also in terms of improving the decentralization of Ethereum, because it doesn't have to have so much capex of these miners in certain data centers, or it's also improving the energy efficiency of Ethereum. So anyway, you told me short answers. I'll try to keep it short. Yes,
Nice.
I'm hot on the Ethereum merge for sure.
Nice.
All right then, hot or not, central bank digital currencies.
Okay, so I have to think about this for a sec. I mean, central bank digital currencies, I think, are an important step to get more people bought in who are kind of skeptical on crypto. But honestly, I think the decentralized cryptocurrencies are the more important innovation that's going to be much, much bigger. So I'm hot on central bank digital currencies to help people get into crypto, but I don't think it's the actual big opportunity. That's a diplomatic enough answer.
It's a not. You can say not. You can say not.
You can also say lukewarm if you just want to. If you don't want to commit to either side. But hot or not, one of the hottest areas of at least the last couple of years, NFTs.
Yeah, I'm hot on NFTs. I think they're the real deal. They're here to stay. A lot of things in crypto, they go through a big initial hype cycle and then they correct down, and that's kind of where NFTs are right now. But the long-term potential, I think, is enormous. And yeah, we've launched our own product in that space, Coinbase NFT, because we think it's going to be a big deal.
All right, a couple to go. Hot or not, Web3?
Yeah, I'm hot on Web3. So I think, look, it's kind of a buzzword. People are like, what does it even mean, right? Look, Web 1 was all about reading, kind of static web pages. Web 2 was about reading and writing. You had like interactive web pages. Web 3 is about reading, writing, and owning. So now people can launch these communities. Imagine like Uber or Airbnb or Wikipedia, whatever, that, if people had actually who had contributed to growing those marketplaces and platforms, if they had been able to own a piece of it for all the work they did, that would have been super cool. So I think Web3 is a big deal, and more apps are going to get built in that style.
And then, Brian, one more. The learning that Bryce and I are taking from this is if we're speaking to a CEO of a crypto company, we should expect you to be hot on most of the things in the crypto ecosystem. But hey, we'll ask it anyway. Hot or not, the metaverse? Yeah,
so you're right. I'm hot on the metaverse too. I think, I'm like a pro technology. I think technology is like one of the best ways to improve the world. And so, do I know exactly when these things are going to take off? No, but like as a long-term trend, I think they're great. The metaverse, by the way, plays pretty well with crypto, I think, in the abstract at least, because if you're going to have a persistent world with different things that you actually own, you don't want it to be like, an in-game item that like some centralized company controls. That you want to actually own it, like these digital items, and have them be provably unique. So to me, that sounds a lot like NFTs. I think a lot of the best metaverse platforms are going to have NFTs as sort of like, whether it's a spaceship or some house or, property in Decentraland. These things are going to be NFTs in my view. And I actually think Coinbase probably should be doing more here to kind of integrate with some of the early metaverse platforms. Like, I don't know if you guys have been playing around with any of the latest Oculus stuff, like Horizon Worlds and stuff like that. But I think, there's some cool opportunities there.
One of my New Year's resolutions this year was to try and buy some property in Decentraland. But when I logged on, it is ridiculously expensive, almost more expensive than residential property here in Australia. So anyway, the dream continues. So Brian,
I was surprised how much it cost as well. Yeah.
I know, it's ridiculous. So Brian, we're living through a bit of a crypto winter at the moment. Some of us are feeling the pain. How have investors on the Coinbase platform been positioning their portfolios? What are you kind of seeing as some of the activity that's been going on?
Yeah, so I think, look, if you're going to be an investor in crypto or even just try to use crypto for a variety of things, you do have to have a strong stomach. This is still an early industry, and I've gone through 4 of these cycles now. So for me, it feels a little bit normal, but each one is still a little difficult. And I can only imagine how difficult it is for people going through their first cycle. I remember actually back, I think it was in 2011, I went out and bought a little bit of Bitcoin. I didn't have any money at the time, but I bought like maybe $500 or a couple $100 or something like that. And I bought a Bitcoin at like $11. And it probably crashed down to like $2 per Bitcoin. And I thought I was such an idiot. I was like, oh my gosh, I'm like the worst investor ever. And so, basically, but I didn't sell. I just kind of held on to it. And obviously over a period of many, many years, like that worked out great. And so that's the lesson that I tell a lot of people. If you are going to kind of invest in crypto or anything like that, look, start with some de minimis amount that you're not super attached to, that you'd be okay if it went down to zero, right? In theory, not necessarily that it is, but crypto has gone through some corrections of like 85%, 80%, right? We just recently went through one of at least 70% or something. So if you can hold through a cycle at least, or multiple cycles, ideally just put 1% of your net worth and hold it 10 years or something, then you're going to be fine. But if you're trying to kind of trade day to day and everything, I think it can be very stressful, and people get into all kinds of crazy situations. So yeah, dollar cost averaging, take a long-term mindset, put a small percentage in that you're not going to be too stressed about, and then you'll be able to hold for the long term. I think that part is a much better approach.
Yeah, nice.
Yeah, it is just amazing how resilient Bitcoin especially has been, just falling 80% 4 times in a decade. And at least historically coming back every time. It's pretty rare that an asset does that. So there's something there. But I think, Brian, the other thing that we've sort of seen this year is some of the big, I guess, companies in the crypto ecosystem collapsing or nearly collapsing. Celsius, Three Arrows, Terra USD, Luna, some of the names that come to mind. How are you sort of thinking about what's happened this year, not just with the price of crypto assets, but also with some of the companies in the crypto ecosystem?
Yeah, so as you mentioned, in this downturn, which happened to coincide with a broader macroeconomic downturn, we did see some kind of contagion from certain firms that were a bit over leveraged, and you mentioned a few of them. I guess the way I think about it is that, in that sense, crypto is not too different from the traditional financial system. In a down market, some hedge funds that get over levered and these things tend to blow up. It's actually not that different from the traditional financial system. The difference in the crypto world, I guess, is that, it didn't require any kind of government intervention or bailout or anything. And that's kind of what's amazing about crypto, is that it's built this truly decentralized, more global crypto economy. And it's so far operated incredibly well, even through a massive correction in the broader macro environment, and everything went down 70-80%. And still, crypto just kind of keeps on functioning. Even if there was a couple firms like this that were highly levered, and they should probably do a better job disclosing these things to customers about exactly what they're doing, and customers need to be made aware of how their funds are being used. That part is we'll leave that to others to figure out, in the courts and whatnot. But in general, I think it showed that the crypto economy is very resilient. And luckily, Coinbase didn't have any exposure to these particular firms, and we've taken a pretty conservative approach for the long term. So I think, having been around 10 years, it's given us a good perspective on how to weather any of these storms. And that's something we'll keep doing for many decades, hopefully. Yeah,
I was reading something about Three Arrows, and the analogy was made to long-term capital management, which was a stock trading firm in the late 90s that collapsed massively. But the Federal Reserve stepped in to backstop them, to bail out a lot of their customers, because they were similarly, massively over leveraged, and there was a bit of systemic risk there. I guess the difference in the crypto ecosystem is when Three Arrows gets over leveraged, the Federal Reserve doesn't step in and bail them out. But you're right, there hasn't been as much contagion across the industry as some may have expected. Is that just really good risk management from the point of view of crypto CEOs? Or how do you attribute, I guess it could have been a lot worse and it wasn't. So what do you sort of put that down to? Or was it just Sam Bankman-Fried opening the checkbook and backing up a lot of companies?
Yeah. Well, look, there's always opportunities in down markets. So I think, lots of companies are out there sort of looking at opportunities, but at least the way I think of it, just because a company gets in trouble financially doesn't mean that it should be bailed out, right? That's part of a healthy function of capitalism, is that, good companies get more capital to allocate, and bad companies, sometimes they go away. And so those people can kind of move on to more productive areas of the economy. So it's funny, even if you go back to the Bitcoin Genesis block, you may know this already. I'm not sure if some of your listeners may, but it's in the original, the first Bitcoin block that was ever mined, Satoshi, whoever that was, decided to mine in that block this headline from the Times that, Chancellor on the brink of bailout. And so Bitcoin really was born as a result of the 2008, or in that environment, the 2008 financial crisis. And it's kind of saying, hey, why are we taking taxpayer money and bailing out these things that create lots of risk, and there's moral hazard issues and all these kinds of things. So I don't know, maybe I'm just a diehard capitalist at heart, but I do think that creative destruction is a real thing in capitalism. If something's not working, if it's not creating enough value, or it took too much risk, it should probably go away, because that's it's a signal to the rest of the market about how to manage customer funds appropriately, and how to build resilient companies that do have long-term capital management, not just in name.
So Brian, with everything that you're sort of seeing at the moment, we went through in the game, NFTs, Web3, Metaverse, plenty going on. But what are some of the areas of the emerging crypto ecosystem that you're really excited about that you think, this is what I'm going to tie myself to. This is what everyone should be sort of following and thinking about?
Yeah, well, I'll give you an example of a couple things that are already here today, and then a couple on the horizon. So, one thing is staking, right? Like people are now able to earn yield on their crypto assets, kind of like, a savings account or something like that in the traditional world, but you can actually direct your own funds and stake them. But what you're doing, by the way, that's a fancy word of just saying you're helping these crypto networks achieve consensus, is kind of a very high level way to think about it. And Coinbase makes it really easy to kind of flip a button, begin to stake your crypto assets, and then you can earn a yield on this and kind of get payouts from it every day or week or month. We also have a self-custodial wallet called Coinbase Wallet. The name's probably a little confusing, but what it means is a lot of times people start off by buying their own crypto and they want to store it on a centralized brokerage or exchange like Coinbase. And that makes it really easy for them to get started. But increasingly, they want to go use their crypto in more and more ways, including in Web3, and actually store it themselves. It's a longer conversation, but anyway, we've made it really easy for people to transfer their crypto into something called Coinbase Wallet, and now they can go use this whole world of dApps or decentralized apps that are being built in Web3, which is really exciting. We also have a product called Coinbase Cloud, which is essentially helping, it's sort of like Amazon Web Services for crypto. It's so any kind of business or startup that wants to integrate crypto, we have a suite of APIs that makes it really easy to do that. We even have something called Coinbase Commerce that's letting people accept crypto payments. We're seeing crypto payments grow in some areas that are like not so much brick and mortar, stores like local coffee or whatever, but more like online marketplaces and applications are sort of like the early adopters of this. Communities where the only way to pay is with crypto because it's truly a global online community. It's not based in one particular country. So those are a few things. And, there's a lot of cool stuff coming down the horizon as well, which we're just starting to see in crypto, like decentralized identity is a way, traditionally people have had their online identity is with a big tech company, Google, Facebook, Apple, or in the traditional world, they have their identity with the local government where they live. There's a printed piece of paper or ID or something. But in the crypto world, you can actually own your own identity, and it uses kind of public-private key cryptography, which is probably beyond most people. But the goal of it is like you can own your own data. You can make sure to be the one who signs into any profile, and like you own that. It's not controlled by some big tech company. There's a lot of other stuff we could talk about. There's decentralized social media. There's, I think, like crypto cities are on the horizon, which could be really cool. And DAOs are going to be like pretty interesting, but I'll leave it there. Probably too many things that you can talk about.
No, I love that. But I want to put our investing or investor cap on now because a lot of our listeners, out there building portfolios in listed markets. And you've gone from being a software engineer in 2010 to now a CEO of more than 5,000 people, a company with a market cap of 17, 20 odd billion dollars. It's been quite the growth story, and I'm sure you've learnt plenty along the way. So what have been some of the, I guess, major surprises or major learnings for you over the last sort of 10 years from your own point of view, leadership, managing people, things that you didn't expect to be the case?
Well, let's see. There's a lot of things we could jump into. I'll try to narrow it down. Look, one thing I've noticed just about creating companies is that probably the number one skill set is around determination and resilience. It's actually not, like, I don't think, I wasn't like the smartest person who ever tried to create a company in this space. I was not the best at fundraising. I don't think I even necessarily had like the most brilliant idea or anything like that. It's like, it's 99% perspiration and just execution. And you have to be kind of unreasonably determined to be a founder, because starting any company, it's just going to be setback after setback. And, if you're starting a company because, you just want to make money or something like that, it has to be about something bigger than that, something you're really passionate about, because otherwise you're going to be 2-3 years in, nothing's working, someone's suing you, this person quit, your stuff got, your code sucks, whatever. And you're just going to give up, because it's just, you have to move from one setback to the next with enthusiasm is a great quote that I like. So that's one thing I've kind of learned about determination. Another quote that I like is like, action produces information, right? So people often will kind of like debate at these things endlessly, like, well, is this going to happen, or is that? And I think this, and I think that. And it's kind of like you're looking at this mountain and it's shrouded in fog, and you're at the base of the mountain, and you're like, I want to get to the top of that mountain, or at least pretty far up it. And look, at some point, like the only way to do it is you have to take a few steps into the fog, into the unknown, because once you take a few steps, you can then see a few more steps ahead, and maybe you're up against a cliff, or maybe you have to backtrack, or maybe you see another few steps that keep going up, and that's great. But I do see this a lot. Like most people in the world, they have ideas and they think about like, what if that, and what if this, and someday maybe I'll do it. But the entrepreneurial mindset is just like action produces information. Just do something, even if it's anything. If it's the wrong thing, it'll help you think about what the right thing is. And there was many times in my life at Coinbase where I didn't really know what to do, and so I just started doing random things or anything I could think of. And most of them weren't the right thing, but oftentimes, right as I finished doing the thing that was not the right thing, I'd be like, actually, I know what I should have done, right? And so that's been a great lesson for us as well. There's lots more we can talk about if you want to jump into any specific areas.
I think both of those are great. Yeah, I love that. Action produces information. Alec and I, we've only quit our corporate jobs a couple of years ago and sort of feel like we're in the same, well, not the same situation, but a situation of, trying to get to that top of the mountain covered in fog. And I think that's a great, something that we'll definitely take away. So yeah, that was good. Yeah.
One thing, keeping our listed stock market investor hat on, one thing that Bryce and I are really fascinated in are what the metrics that matter and the metrics that don't, because there's a lot of noise in the world of the stock market. And Bryce and I both come from a retail background, and when we were working in retail, you realize that there are some metrics that just matter more than most other ones that the media spend a lot of time speaking about. So I'm interested in your world of crypto, of online exchanges. What are the metrics that really matter for you as the CEO? And, for us as investors, what are the metrics that we should really pay attention to?
Yeah, it's a good question. I mean, what you end up measuring does change the culture of the company. And I guess as an investor, it's even a more interesting question. I'll try the investor piece first, then think about Coinbase. I mean, so on the investor side, like the simplest thing that people always look at is the price, right? And so much ink has been spilled kind of with people writing in the press about the price of this is up, it's down, this much. And it's really, to me, it always strikes me as kind of like a very short-term mindset around like, if it's up, that's good. And if it's down, it's bad. That never really makes sense to me because, well, first of all, if it's down, maybe, you should buy low, sell high. If it's up, maybe it's already overvalued. And so this, on the face of it, that advice might be wrong. But I think what I always cared about with crypto was not so much what the price of it was, although that's nice and it gets more people interested in everything. But the thing I was always more interested in was, are people actually using crypto more, right? So I started looking at things like, what are the number of transactions happening on these networks per day or per month or per year, right? And what I was really excited to see over the last, since maybe 2018 or so, is that people, for the first like 6-7 years of the company, people would always ask me like, where are the use cases? This is all just trading and people are speculating. And, around 2018, we started to see things like DeFi really take off. And then we saw, like crowdfunding and, NFTs. And like now there's all this stuff, like tons of apps and startups being built in this space. And so that is starting to, I start to look at how many transactions per day are happening on these networks as a good indication of like real utility. So I don't know, that's just one high level idea. You can also look at like the number of GitHub commits for these different different blockchains and sort of get a sense of what the developer community looks like. I mean, you have to kind of tease apart the data because you don't want to just get fake commits, right? Some of them are just somebody forking it and changing one line or whatever. But if you can somehow scrape like the data on GitHub and GitLab, and I think I've seen a lot of investors use that as sort of a proxy to understand like where are the nerds spending their time on the weekends? That's a good indication of where things are going in the future. In terms of Coinbase, in terms of what metrics, we look at, so look, a lot of our North Star, our North Star metric is really around like monthly transacting users. So it's not necessarily people just trading. It's like, although that's one of the types of active user trading users that we have, or sorry, transacting users we have. but it's also people, they're doing staking, they're doing peer-to-peer payments, like they're earning money with crypto, they're engaging with dApps and DeFi, and so this is another North Star metric that we have internally is like, how many people are actually engaging in the crypto economy in some meaningful way, not just like viewing a page or looking at their balance, but actually doing some kind of transaction. And what's cool is that we've seen in our own user base at Coinbase, it used to be like 90% was around trading, and only 5% or even less a few years back was around non-trading activity. Now we're seeing more than 50% of our users, our active users, are doing something other than trading, in addition to trading typically, with their crypto. And different transaction types are really emerging. And that's really exciting to me because it shows that this has moved well beyond trading, and it's now starting to be a true economy where people are earning money, spending it, borrowing and lending, and doing all kinds of things that aren't even anything to do with money, frankly, like identity and social media. So it's been pretty cool to see the evolution of the space.
Well, Brian, it's been an awesome conversation. We are unfortunately running out of time, so we will move to our final 3 questions that we ask all of our CEOs when they join us on the show. And it starts with the next 12 months. What's coming down the product pipeline that you're able to share, or major developments for Coinbase over the next 12 months?
Yeah, let's see. There's a few things. So, I mentioned a few times decentralized identity. I'm pretty excited about that. I think being able to have a true identity is like a nice foundational piece of the crypto economy, because then you can have like reputation associated with that, and like you can have even a friend graph and start to follow people, and all kinds of things emerge from that. So decentralized identity is something that we're already integrated into our products, like Coinbase Wallet. You can go get an ENS name, they call it, like an Ethereum name system. And we make it easy and free for any user to go in there and claim a decentralized identity. So that's pretty cool. Another one is, we launched a subscription product, kind of like Amazon Prime, but it's called Coinbase One. And so for people who use the crypto economy a lot and they don't want to have like high trading fees, you can basically just subscribe to Coinbase One, and then you get unlimited trading with no trading fees. So that's pretty cool. And then I would say we're going to keep doubling down on our policy efforts globally. And being in Australia, that was a big piece of what we did with Austrac, and we've worked with a number of kind of the local folks there, like Blockchain Australia and the Royal Melbourne Institute of Technology, to just kind of collaborate more. But there's a lot that we can do on the policy effort side. We're integrating a lot more of that into our products, actually, by helping our customers understand, for their policymakers in their local area, what are their positions on crypto? Are they pro innovation, pro crypto, pro sensible policies, by the way, around regulation that'll help make sure this space is treated with on a level playing field with traditional financial services, but also preserve the innovation potential? Or are they still kind of anti-crypto for some reason? And we want to make sure that all of our customers are aware of these kind of things in democracies around the world. So those are some of the things coming down the pipe in the next 12 months.
Brian, I've got to ask a follow-up on Coinbase One. Bryce and I have a running joke that every business now wants a subscription service and then a streaming service as part of that subscription service. And we saw Walmart, of all people, add a streaming service to their subscription offering. Are you going to have a streaming service as part of Coinbase One?
I totally feel you on that. Like, there was that great meme during the pandemic that was like, Netflix is this much, like $9, and Amazon Prime and like Hulu, and then it was like Harvard University, like $300,000 a year or whatever. And it's basically just sitting there in front of the streaming, just like everything else. But yeah, so we're not planning to launch any video platform in the near future. But just as a little like CEO inside baseball here, it's funny. Like, the reason why so many companies love these streaming things is that, especially in the public markets, they give you like there's a huge benefit to having predictable revenue streams, right? And it's sort of called like quality of revenue, right? And you, as investors, I'm sure you're like familiar with this, but the trading fee business that our original products were based around, incredibly lucrative when people are doing high volume trading in up markets, especially. But it can be so volatile where things we just have. It's like feast or famine, and that's fine from my point of view. We don't, because we zoom out, we think long term, right? Like maybe things are really good one year and not as good the next year. And we kind of smooth it out over a 2 or 3 year period. But in the public markets, they don't like that. They want your revenue to be predictable, and there's a real premium for that. And so I think there's a way we can make it win-win. It's actually better for customers because they can basically just pay one fee, know exactly what that is, and then have unlimited trading and doing all kinds of other things, not just trading in crypto, like NFTs and staking, getting better rates. And so it's just like peace of mind. I think if people want to pay that flat fee and then never have to think about it again, and it's better for the company because they get their revenue streams are more predictable. So anyway, a little inside baseball there.
So Brian, what's the biggest risk to your business at the moment?
Well, for Coinbase, I think the biggest risk is probably that we just have a lot of new employees that haven't gone through a crypto cycle before. So I do feel like a lot of my job is just kind of keeping everybody in the boat and, let's not get distracted. Let's just keep building great stuff. Traditionally, these down cycles are actually big moments and opportunities to go build the best stuff that's going to help us get out in the next bull run. And so if you look historically, the down markets have actually been really good for us as a company. But the first time people go through it, it's super scary, right? And their friends and their family are sending them these news articles about, oh my gosh, isn't like crypto failing or whatever, negative story is out there. So a lot of my job is just combating that and trying to be more visible and vocal in these moments and tell people, look, like markets go up, markets go down. And in this case, it's not even a crypto thing. It's like the whole macro economy is down. But it doesn't mean like this trend is changing. Like our mission is still really important. We want to create more economic freedom in the world. We think crypto is a good way to do that. These products are going to go through cycles and they have a ton of upside. And so, yeah, let's keep building the stuff that's the most trusted, the easiest to use in the crypto space. And I think it's all going to work out great.
And then Brian, final question that we like to end all of our interviews with. We're long-term investors here at Equity Mates, and you mentioned there that you like to zoom out and think long-term and smooth out different years. If you think about Coinbase in 10 or maybe even 20 years, what does success look like?
Yeah, I think that, look, in 10 years, I hope we have at least 1 billion people accessing the open financial system every day through our products. I think success is that we have a more global economy at that point, that where there's more economic freedom and things are more fair and they're more free for the average person. It unlocks a whole bunch of innovation. Crypto is kind of considered this new global reserve currency that just eases and reduces friction in the global economy and unlocks innovation. So that's what success looks like to me in 10 years.
Huge goal, 1 billion people.
1 billion people.
That is ambition. Love it. Well, Brian, it's been an absolute pleasure chatting to you today. I took so much from that episode, and I'm sure the Equity Mates community did as well. We appreciate your time. Good luck with the launch here in Australia. We'll be watching closely, and hopefully we can catch up in the future again. Thank you very much.
Yeah, thanks, guys. That was a great conversation, and I love it if people can go check out the app and let us know how it goes.
Thanks, Brian.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.